Hi, this is the US Chartbreakers on Zach's Traders Cafe for Friday the 11th of August. Starting off with the S&P, which has been trying to rally after the declines that we've seen over the past 2-3 weeks. Obviously that peak through the 4600 zone. We were looking for potentially support coming in 45, 20, 30. Obviously we fell below that, and then the next level down 44, 50, 60, and that's sort of where we are at the moment. Yesterday's peak just through 4,500 suggests that we need to see an end-of-day close above that level to continue the rally that we had basically since back in October. Otherwise, there's a chance of maybe a fresh leg down towards the area of the 50-day moving average, currently around 44.35. But at this stage, not really expecting worse than that. On to the stocks, and starting off with Applovin, which has broken through the initial target there around $36. Above that, we're looking for up to 45 at an August, 1-year resistance line projection, and that could be seen as soon as the end of next month. Only really back below the top of the gap there around $33, really delaying the idea of an ongoing move, especially given how many gaps higher we've had over the course of this year to date. A frequent flyer here over the recent past has been applied Optoelectronics, and here you can see why from the daily chart. Rising trend channel, the red rising trend channel there. We were looking for $16, perhaps by the end of this month. It looks like we could actually get up to as high as $20 by the end of this month, while we remain above recent support around the $12 mark. If we're really lucky, we may just have support there at $13, which was the old resistance on the way up just earlier in the week. Moving along to a stock which is new to us here at the Chartbreakers. We've got a stock which is still looking like it's looking like it's ready to recover. Unfilled gap to the upside yesterday, breaking post-April resistance around the $10 mark, and above $10 looking for $13 by the end of this month. The bear trap gap reversal, a decent signal there. Moving along to a stock which is another new one, CS Disco, and here you can see the unfilled gap to the upside, bear trap gap reversal as well from below the old July support. The current situation is at above July resistance at $9.80. We're looking for $15 as soon as the end of next month. That's the top of a rising trend channel from the beginning of the year, back in February to be precise. On to a regular here, which is maybe ready to take off again, Cleanspark. We obviously had a decent rally going into the middle of last month, but back to the bottom of the rising trend channel now. The February rising trend channel tested the 50-day line, the blue line there, for the whole of this week, and above the $5 area, looking for the shares to head up to the top of the channel as high as $8.50 by the end of next month. Both the 50 and 200-day lines both rising nicely, and the RSI is pushed back above the neutral 50 level as well, which tends to be a decent continuation signal. Moving along to Ezfill Holdings, and here looks like we're just pushing up off the lows. We had the bear trap at the end of last month below $2, and now we've got a break of the 50-day moving average and that May resistance line around $2.20, above $2.20. Looking initially for $3, the $3 area at the 200-day moving average, hopefully by the end of this month, maybe by the end of next month. Big target there up to $5. But the key obviously is holding the $2 area. A stock which has been covered in before, and let's see where we are at the moment. A couple of false dawns there for this stock, Indaptus, but looks like this might be the lucky time after the failure at that resistance line there from back in April. The resistance line from April around the $2.30 area is an end of day close above that. We could be heading up as high as $3.50, and that could happen as soon as the end of this month. New name coming up now, and it's LifeMD, and here you can see that we've got a rising trend channel that's been in place since February. Gap to the upside, unfilled gap to the upside for yesterday's session. So we're looking for $6 here while we hold above the floor of the gap, which is around the $3.80 mark. RSI just pushing through the neutral 50 level as well. So we're encouraged that there is a new leg to the upside coming, especially after that quick bounce and quick bear trap from below the 50-day moving average. One of the better stocks of this selection is Limbach, which has blasted through the previous target area around $30. That suggests that there could be a new leg to the upside, the black line there, which is a top of a rising trend channel from back in May last year. That's heading as high as $37, so we'd hope for that by the end of this month, while we remain above the $30 area, ideally even $31 on that. On to the last two, and starting off with Sabre, which we've looked at quite a lot. Here the shares just nudged the target area around the $5.50 zone. That's a resistance line projection from back in March. Through $5.50 on an end-of-day close basis, or a weekly close basis today, we could be up to as high as $7.20 by the end of next month. The key here is holding above the 200-day moving average around 480. On to the last of the selection, and here it's Yeti, which I believe is a new stock. Here we've gapped up quite viciously. We've got the 50 and 200-day moving averages both rising, and a break of that resistance line there from February looks as though it's doing the trick at $43, above $43, looking as high as $55 by the end of next month. If we're really lucky, we'll stay above the $44 area, which was basically that resistance area at the beginning of May. That's it for me today. More updates over the weekend.